Check, check, quick sound check. Can everybody hear us loud and clear? Let's get a confirmation in the chat if you can hear us. What's going on, Coach Paul?
Hey, Coach Jay, how you doing today?
Doing good, doing good. Welcome back. And welcome to everyone to
Hey, how you
another
doing today?
session of At the Buzzer, our market recap. If this is your first time here, I am Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we both believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. Been a Topstep Performance Coach for a little over a year. Been trading the markets for about 11 years. Started off trading stocks and options, moved over to trading futures about 5 years ago. And that is my guy, Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, Coach Paul, thank you, Coach Jay. I've been involved in the futures industry for 4 decades. Started on the floor. I've traded upstairs and had many different roles. My focus is I'm a technician, um, a chartist, you could say, and also most importantly, my focus is on risk management and capital preservation. Um, we're here to help you in your journey to become a better trader. And as Coach Jay and I have discussed on our show, the core of that is risk management. So let's begin the show, huh, Coach Jay?
Let's get into it. So, the way we like to start every segment is talking about our top percentage movers on the day. And to the downside, we had the 30-year bonds coming in at number three, down 0.37%. We do know that we had a bond auction today. Ultra bonds coming in at 0.57% in number two. And lean hogs down 0.85% for our biggest percentage mover to the downside. A lot of upside movement on this watch list today.
Wow. Yeah, with only two the bonds and hogs.
Bonds and hogs. That's really it.
That's
Everything to the downside. I'm seeing notes. So all of the interest rate products a little bit down today, but not major moves. To the upside, we are seeing platinum up 2.87%, nat gas up 4.14%. Nat gas also had inventories out today, and silver up 4.29% for our biggest percentage mover to the upside. In the major four markets that we talk about here, the ES up 0.62%, the NASDAQ up 0.72%, gold up 1.73%, gold making a new all time high today, and crude oil up 2.73% for our biggest percentage mover to the upside. We did have some news out this morning. We know we had CPI yesterday, PPI out this morning, another inflation number based on producers instead of consumers. The Pretty much in line with what was expected, right? Year over year, month over month, forecast 2.4% year over year. Actual was 2.4%. Month over month, forecast 0.1%. The actual was 0.2%. As far as jobless claims go, which was also released at the same time as that PPI print, jobless claims forecast 227,000. The actual was 230,000. Uh, Coach, any comments on the news before we get into the markets?
We've been waiting for these CPI and PPI for what, a month? um,
Pretty much.
well with the range. No major revisions from the previous data, I believe.
Nope.
Um,
No major
all
revisions.
all relatively tame. And what was the result? The
Uh,
rally bonds were down what, a, a quarter percent. No big deal. Onward we go.
yep.
What what's the next excuse? I mean, the next big number, the Fed meeting.
And speaking of that Fed meeting, seeing probabilities of a rate cut, I'll save everyone's eyes with the flashbang and the white screen. Looking at the Fed Watch tool, we have a 67% probability of a 50 basis point cut right now. Yesterday, when we checked, that was 85%. And a, sorry, 67% probability of a 25 basis point cut, 33% probability of a 50 basis point cut. Make sure I say that correctly. FOMC
So,
meeting next Wednesday, the next big catalyst that the market is waiting for.
So that's changed a little bit since
Yeah, yesterday was 85.
Tuesday.
Yesterday was 85% of a 25 basis point cut, and it's come down a little bit.
Yeah, I still don't think they would do a half point cut.
Yeah,
I just, but hey, stranger things have happened.
they have, they have. Got a comment from Nime here, and this is for anyone who asks: did they stop giving fire drills? Yes. Simple answer. They
Yeah,
may be back at some point, but not right now. And that's for
not
any
in the foreseeable future.
no. But let's get into these markets.
Yeah.
Kind of a messy day, especially in the morning, where we had the print come out. Yesterday was a wild one, Coach. We
Oh, it was
had
beautiful.
4% move from high to lows in the Nasdaq, and maybe a little bit of a digestion today. Today looks like mini yesterday, right? Where we sold off early, had a nice bounce into the end of the day, and you said something to me before we got onto the call about the state of the market right now and what it kind of feels like. You want to talk about that a little bit?
Yeah, this market feels very solid and bullish to me.
Mm,
We're above in the half hour above. We've been above the 200 bar moving average since after the number on the sell off.
hmm
Um, and it is not relented. Um, with that, we're above the daily 20 bar moving average, and I believe the 50. Um,
Yep, looking at the S&P's 20-day moving average is at 55.82. High of the day was just above 5,600. Where were we at high of the day? Somewhere around 56.07. Currently trading 55.98. The 50-day moving average right around that 55.40 level, and the 200 moving average, of course, way lower than that, 52.22.
and I have a trend line that just closed above on the daily from the all-time high. You don't have to put it up on, but if you take a daily and put a trend line from the all-time highs to the previous highs, we're sitting right there, little above that, the old school trend line. This we might have seen the bottom, and I have this intuition that we're going to rip higher. But
Yeah, it feels like that.
but I have to manage that to the upside. I'm going to trade to the upside.
Of
Um,
course.
and the Nasdaq, if anyone that can rip higher, it's that one,
Oh
right?
yeah, if it's gonna go quick, it is definitely going to be there. It is going to be in that Nasdaq. Um, I see we got some questions about pivots and things. We will get into that, but let's talk about the action on the day. So we had the PPI print come out. We saw Nick and Dakota on fast markets today during the takeover, and trying to trade these markets pretty choppy, right? We have the high of the. Did I do that right? Did I do 30 minutes? I meant to do 3 minutes. Give me 1 second. High of the PPI print 55.81, the low 55.67. And that's on a 3 minute chart, and provided some decent opportunities to trade, right? Pretty much right after it, Coach, we have a sell off from 50% of that level. But the morning action, and I know you took some trades in the equities. I want you to talk about how you traded this day, but
Mhm.
a lot of overlap in some of these candles, especially after that first half an hour, right, where we saw some violent moves to the downside, not really catching any traction or follow through, but making it a little difficult to trade that price action because although it was a range bound market, those any high to low moves in the range happen all in a 3 minute candle, right? So to me, not giving a lot of confidence to trade to the opposite side of the range, if you, especially if you're not trailing, because the moves to the opposite side happen so quickly. Talk to me a little bit about how you traded today, Coach.
Yeah. on my day trading was a little different. I took some early losses trying to buy it versus my swing trades, which I have to hold on to.
Okay.
So every day you have to take into context. The first context is after yesterday's dramatic movement to the upside. We have to build some balance. And we did that. Took some time, but I used the half-hour bar.
Okay.
And if we bring up the half-hour bar and put a anchored VWAP to the first half hour,
To the session open
to the
or the
session open.
Globex
Yeah.
open?
No, the session open.
Okay. Session open right around there. I'm going to take some of this stuff off so we can see exactly what you're talking about. We got the first half an hour. Frame that
So,
candle out for you. And there we go.
and we're above the 200
Mm-hmm.
bar moving average.
White line down
So
here.
on a day trade, actually I had an ad for my swing as I used as a day trade. You framed it out, wait for the first half an hour. We got above VWAP. After the second, we closed above, and I took the risk of against new lows. So I think it was about $750. Oh, I lost your audio, Coach.
Check. You should be able to hear me now. About a 26-point
Yeah.
range there.
Okay. Yeah. Now another thing, I had a pivot for the S&P at 55, 13 and a half. Let's just call it 14. We were above that all day. So I waited patiently. I didn't have a price. Once we broke to that high, I had to take some heat. Didn't get stopped out, and look what happened. We stay above VWAP for the rest
Rest
of
of the
the
day.
day.
We talked a little bit about that yesterday, right? Getting out for a technical reason. If you're getting it in because the market is trading above that VWAP, and maybe not getting out until we get a candle close below that, that's the way you can catch one of these trends, right? We seen trader yesterday catch a lot of that trend to the upside. Not sure exactly how they viewed the markets and trading it, but was able to catch that trend. And if we anchor a view up to yesterday's move, same idea, right? We hold it, never close below it. You can stay in the trend. Now, do you have the patience to hold a trade for 7 hours while it works? Maybe, maybe not. But sometimes letting the market do what it needs to do, and you know, it looks ugly. Coach, I want to ask you about the so we're looking at this on a 30-minute chart. We can see
Mhm.
consolidation and then breakout eventually. If I go down to a 3-minute chart, this looks like anxiety and chaos. How do you manage this?
Well, actually, looking at that 3-minute framed out,
Hmm.
with a better trade was look right there. We broke out of that range. We're above the VWAP. The first time we break out, so like that was the first half an hour, and I was set,
Yep.
and that was my risk to the downside. Now let's frame out the risk on an S&P. So
Hmm.
if I buy that breakout and then that close right up there,
Okay.
and let's say I'm going to risk new lows. And why I'm being aggressive is because of the context of yesterday's rally. We're above the 200 bar moving average. We're above the 20-day moving average in the daily. So there's allocation coming in. There's money coming into this market.
Yeah.
So what is it on one S&P to a new low?
So about 30 points. What is it on
So
an S?
$1,500.
$1,500. Right.
I don't, one S&P for most accounts is too much. Well, I could do one micro
$150.
and then wait for some more confirmation, like VWAP leaving that first 3 minute. and I did some ads.
Nice.
So I did 2 micros, and then I bought 3 more later in the day when it got above, when it closed above the VWAP, almost when it caught that big run. So if you're trading micros, you can frame out your risks a lot better.
Hmm.
Um, for most accounts at TopStep, they're under $5,000 total of risk, right?
Right.
So when we say don't want to lose more than 10 to 12%, that's $500 to $600 in one day. All right, now we can begin to budget with that. It said, well, 100, 2 lot, give me 600. I'm pretty confident of a micro, not 2 lots of S&Ps. Now, you can go the other way. If we go the other way, then we have to be much tighter on our stops.
Right.
Like it has to get or go, and that can create a lot of trading.
For
And
sure.
if you're good at it,
We saw
good on you.
Dakota do it today. I think the one thing I really like about what Dakota did was trading the micros in all of that chop, right? Where we had some traders commenting, hey, this guy's gambling or whatever it is. But I think inherently in what he did that wasn't gambling was trading a tenth of the size that he could have been trading, right? Where it looks like a lot of trades, but he's losing $20 here, $40 here, as opposed to 200, 400, 600, right? Where that is account management. And do I suggest people take 50 trades in a day? Personally, I don't, because I know what that normally looks like for me. But if you're going to do it, there's a right and wrong way to do it, right? And scaling down, trading those micros like you're talking about as well, I think is the right way to do it.
Yeah. And Dakota's very skilled at what he does. He doesn't take, he won't take the big beating.
Hmm.
Um, and it's, I couldn't trade that way.
Yeah.
And this is a time to say, develop your, we all have different personalities. At the end of the day, in trading, it's getting to know thyself
Know
first. I
yourself.
know I can't, I've tried that. I don't have the discipline. Just, but I can put on a position and put a stop in and walk away. And I don't need to be
100%.
around.
Um,
That fits me better.
Same here.
Go ahead.
I do like to watch my positions, but for me, just knowing who I am, I cannot make too many trading decisions because then it gets a little off. But a lot of chop. Ultimately, when the market did choose a direction, started to break out of this range of this news candle. Again, the high of that range, 55.67. Going to throw the top step daily levels on here as well because Mr. John Hoagland did it again, ladies and gentlemen. The weekly kickoff high, 55.79 in the S&Ps. We can see it's this line going across my chart right here. I'm actually going to increase the font of that and maybe make it bright red. Honestly, I kind of want to take everything else off and just look at those because some of the other levels I have on my own personally and just look at weekly kickoff high and low. Because I know Hogue, puts a little bit of his own sauce in that, just like you do with your pivots, coach. So it's going to be a little bit different than some of the other volume-based levels. But we see his levels, we see your pivot play out often. So I want to know when the market trades up to those, right? So we see this 55.79, the market trades up to it, gets that rejection back into that, that first 30-minute range that you were framing out, coach. But once we got above that, that's when we really got that acceleration and breakout move.
And just as impressive was that's a stop run.
Hmm.
Whatever news event, whatever that after that we rallied and came. Where did we come right back to?
Right back to it. The market does not forget price. The market does not forget price, even on the newsprint, right? Even on the newsprint. And again, these levels that we're sharing are not intended to say, hey, you should take a trade here. These are areas that all of us as coaches, on the top step levels, on top step X, those are going to be Hoag's levels, but on the Top Step Daily Levels website, those are going to be levels that are shared by all of our coaches. I did not get mine in today, had to run some errands this morning, but I know Coach Paul had some on there, Coach Ray, Coach Vince, and Coach Jack as well. But we can see it even on the newsprint. We rejected. I mean, Hogue, you're good, but you're not that good. You missed it by 2 points on that newsprint. But it's the same idea, right? There's an area that we're expecting the market to potentially respond to, and it did. And we can see it again, rejected it. And like Coach just said, this really scary down move that in the S&Ps, we gave up 30 points in 6 minutes on a level basis, checked right back down to that weekly kickoff high. Hogue, you got to adjust
That's
by
the
a few
true test.
ticks, but a really nice bounce immediately from there. So important levels, I think, and I'm going to continue to say it, to have on our charts. Whether you use them or not, that's up to your discretion. But when you see something happen with this frequency, it's hard to ignore it.
You know, another thing, Coach, with that, when we made those highs before that correction,
Hmm.
because I was looking at the VWAP, we were, I think, on a half hour, just two ATRs away from VWAP,
Okay.
and we talked about that. That's not a place if you want to buy it and you're that far away from volume. Wait for a break.
Yep.
Don't you have I would say a 80% chance of some kind of flush. If you do that and your stop is too tight,
Coach, I'm going to let you keep going. I just got to I'm getting a phone call real quick. I'm going to let you keep going, though.
okay,
I'm going to step out for a second.
um, go ahead. So what Coach was saying, what we were talking about is we look at VWAP from the open, volume weighted average price. So after it gets accumulated, it shot straight up. What we've been noticing is once you get away that far away from VWAP, the buying has already been done. You're late to the game. This would be a classic FOMO just to buy it because it's got to keep going. Um, if you're quick and good and you can scratch a trade, yeah, good luck. But if you want to sell it, you could find something inside there to sell. Um, but the overall is if you're establishing longs or a trade, try to get it as close to volume as you can. And why is that? Because we're just participating. We talked about this Tuesday. We're just one of those little lamprey eels on a whale. We want to go for the ride. We're not here to make markets. Um, so the whales come in and play, right? That they have that's volume, and they're going to choose volume chooses the direction. Um, so once you can get a trade close to volume, you have a better chance of continuation. The farther away from volume, the the opposite. Um, so in that break, which was I don't know if anybody got caught in that break. That break was rough. It was 30 points. It was $1,500. And to me, I believe that is a classic uh, stop run. So be careful when you're away from volume like that. You have the chance of getting washed out if you're buying it. Okay, let's answer a question. Why simple moving averages instead of EMAs? I You can use either one. I found through all my testing is simple moving averages didn't versus EMAs didn't make that much of a difference in my trading. What is the difference? It's just the simple calculation of the moving average over a certain amount of periods. Um, the exponential moving average gives more credence to the most recent data. Um, if that's you do the test. I did the test. It didn't matter in that much in mine. In my style of trading, it might in yours. So run both of them.
Awesome.
The next question: What did you guys? What did you guys do you expect for tomorrow? I see not important economic news. Um, I don't know. Tomorrow's Friday. Do we have any news?
No news on Friday. We do have Michigan sentiment prelim at 9 a.m. Central Time. I'll know what I'm expecting tomorrow is some rollover action, right? Are my expectations going to be right? Maybe, maybe not. But I am expecting somewhat choppy, right? And when I say choppy, the way I look at a choppy kind of range bound start to the day is the likelihood that we stay in whatever tight range that we're in for that first hour, hour and a half. The likelihood that we stay there for the entire session is pretty low. So the way I frame out that day is okay. If I'm not going to trade just range bound market, and I want to wait for the market to choose a direction, I have to wait until it chooses a direction, right? Like today, eventually the ES did choose to go to the upside, but it took 4 hours to do it. So I'm reminding myself just be patient if that's what the market shows, because a trending move will happen eventually, and you can catch that one. You only really need one good trade for the day. So stay patient if it's going to look choppy that way.
All right. We did have a question from Joe Chakungal.
Okay.
How do you use pivot in your trading? Are you looking to get market sentiment or direction? For example, above the pivot long, below the pivot short. Um, if I today, I'll use today's example. We stayed above the pivot, but we were pretty far away from it. So I waited. But it stayed above, and the volume VWAP was above. So I just took the long side. That's how I use it. It gives me more confidence. If that VWAP is under the pivot and I want to buy it, I'm not going to, unless we get volume above it. Um, quickly, a pivot it has been used for as long as I've been around. Probably it's been around a long time. Versus a 50% correction. Pivot it just takes the high of the day, low of the day, and the settlement of the day. Add them up, divide it by 3, and it gives you a better, well, I won't say better, a different way of viewing a correction. What happens over a series of time, that pivot, we need to remain above it. As like if we're running up to a bull market, that pivot is going to come in. We should trade above it, not below it. Roughly. So yeah, that's a bit of it. You you hit it correctly. Above or below pivot. I don't want to be aggressive buying something below the pivot with volume below it. If that makes sense. Go with the flow. It's another, it's another tool for measuring the flow.
Yep.
So
Makes
should we move
sense.
on to the NASDAQ?
To me, yeah, let's look at the Nasdaq real quick. Similar story to the S and Ps. We'll just look at it level to level really quick, and then we will go to crude oil and gold. The Nasdaq. So we had actually what I framed out here was the close, yesterday's close.
Huh.
That power hour kind of rally that we had
Uh-huh.
because of the rally that it was, right? I think we've heard Hogue mention that kind of as a late spike. He talks a lot about the last, excuse me, 10 minutes of the market. So I framed that out because of that action, right? We saw 100-point move pretty much in the last 10 minutes of power hour. So wouldn't be surprised at a retest of that level because we probably had some buy side imbalances there. And the reason I frame that out is for this reason specifically, right? We see the market come back, check this area, 50% retracements happen, equilibrium, 50%, whatever you want to call it. And if we remember last month's PPI print, right? We talked about this yesterday. Is that right? Somewhere around there as well, right? We had a level down
Yep.
here, 19, yeah, somewhere around there as well. A lot of overlap. The market does not forget price. And just really interesting to see a revisit of that. That was on the session open. We did also have today's, and I'll go down to a 3-minute chart. Today's PPI slash jobless claims print right at the highs of that range. A quick revisit. And once we started to hold above yesterday's close, pretty much same story as the S&Ps. The one thing I do want to point out is, and we talked a little bit about the monthly VWAP yesterday, and we've gotten a close above, and I'll just put those on the charts once more for everyone to see them. Monthly VWAP, we closed above it yesterday. We had that push, and we said, if we get some candle closes above that monthly VWAP, eventually we're going to see some acceleration because everyone who was short all month is going to need to start taking profits, and we see new buying come in, right? That's the monthly there. I'm going to zoom out, and we can look at the all-time high VWAP, which is now the important one in my mind. And that was from that fateful July 11th day, Coach, where we had the Bank of Japan news. I'm going to make this one gold because we're going to follow the yellow brick road to profits. We are back above the all-time high anchored VWAP, right? So just let's try to frame that out. Think about what it means. Back above this, buyers are now in control from the last time we made all-time highs if they're still holding on to these trades. And the way I'm thinking about this is if buyers are taking control now and any sellers from these all-time highs may need to start taking profits, we may see that acceleration move happen again. Where am I looking? Higher time frame targets up near that 20K, and do we just continue to push from there? So today's price action got us above that all-time high VWAP. We can see we bounced around it for a little while where the market was deciding, hey, are we going to let this go or are we going to, sell here again? And ultimately they let it go. We got to close above. We have seen it happen once already, and sellers were able to take control under that 20K. But let's see what the story is this time. But I'm agreeing with you, Coach, that this does look bullish.
Yeah, it seems like what I'll call allocation. Like yesterday was institutional buying all day. They got the numbers out. Now it seems to me the CPI is really what they waited for. There was no big surprise, and right off the bat, it was a surge of buying and it was heavy volume.
Yep.
What can we confirm from that? It wasn't retail buying. That was professional. I would say professional, institutional buying.
Yep.
It was interesting because they did it right until the close, and you framed out the last hour, and we held it, and right after the next hour, what happened? The buying began again. So this isn't running stops. This is institutional sized movement. So
Agreed. We got a question from Tommy. Monthly VWAP, do you just anchor at the open of the first day of the month? Yes. First 30-minute bar of the month. I'm going to anchor a VWAP to the all-time high anchored VWAP. Remember, guys, when I anchor these VWAPs, my VWAP settings are open, high, low, close, divided by 4. Right, so you want to change this source to open, high, low, close, divided by 4. I'm on a 30-minute chart, and I'm anchoring to the candle that made the high of the market at 29.83. And then you want to zoom out to see the full range, because if you're zoomed in, it may adjust what that range looks like. All right. If there's a monthly
Nice.
VWAP in Topstep X that's easier to use. Uh, Personally, I like to put them on the charts myself because I color code them. I know exactly what they mean. Um, uh,
It's important, yeah.
yeah,
Otherwise, they're just lines floating through time. You got to go back. What did I put this here for?
right.
Um, Another thing, you just with that text, you can put a text.
You could,
A lot of great stuff.
you could.
Color coding is always, to me, is the most efficient.
Got a comment from Alex here. Bottom of today was the year's VWAP. In the NASDAQ, was it? Let's zoom out and see. I didn't have that one marked out. Maybe I should have. It's a good one to have, but let's just look real quick, right? Because if that was another great case for this being bullish. Let's see. Yearly anchored VWAP. That's close enough. And we'll make it blue. Fast forward. That was yesterday's move. So yesterday we got above it. Yeah, this is strong. This looks really strong. Where the last time, coach, and the difference is we talked about this a little bit. The last time we had this move up back to it towards that 20K, remember we were talking about it was on lower volume?
Mm-hmm.
Volume's above average these last couple of days.
Yeah.
They're back.
Yeah. Um, that's why it feels this way. It's like the sellers get no time. Even today, even yesterday, right? They're buying it on discount,
Right.
right? So
Right.
they're going to be aggressive. They're not waiting for the hit the bid. If I put a bid out there, you're not going to hit me if it's size, right?
Right.
So it's different. That's a great point on that volume. Good catch.
And you know, again, all that information, how do we day trade this? If we're above all of these higher time frame VWAPs, I'm probably only leaning to the long side. But then it's still important to get good trade location in that case, right? I was talking about, yesterday, some of my favorite trade setups, and coach, we've talked about this a ton of times, but failed volume, right? If we think
Oh,
about,
there it was.
right, if we think about, uh, hey, we're on a higher time frame, we are moving up to the upside. Maybe I don't want to be buying the highs because there's potential pullbacks in the market. But if I can find failed volume, that gives me good trade location for a day trade, right? We talked about, you guys remember, we talked about this failed volume pattern yesterday. Heavy volume outside of the open on this 8:48 Central Time candle in the NASDAQ. You frame that out, we get a candle close above it. This candle allows you to limit your risk. It's 60 points to the low of the candle on a one lot. That sounds pretty expensive, but that's why we can trade micros as well. The true drawdown on that trade was about 22 points if you bought it at the highs. And again, failed volume gave us an opportunity. That happened a lot. It's a scary trade to take because, you know, what if we don't see the follow through? It's a scary trade to take if you try to catch it at these lows, right? And we talked about maybe doing that as well, where you can improve the risk to reward, but uh, it's a lower probability trade because that follow through could just continue here. But today's pattern, if we pay attention to the personality of the market for today, it gave us a few of these with immediate bounces, right? Here's one here, here's two here, here's three, and then this one would be the one that you got stopped out on. But you want to make sure you keep your wrist tight if you're buying all of these because of this, right? Where this continuation could happen, and then you're wrong on the trade.
You mean you might be wrong?
I never lose, but there's some traders out there in the chat that might deal with that. So, uh, just joking, of course. And then again, here's another one here that failed selling, the same one that we got in the ES. This one a little bit later in the day, but candle close above it. Do you take this? Maybe this could be one that you get stopped out on because we're not seeing that follow through to the upside, right? But not every trade is perfect. You're not going to win 100% of the trades. And where this volume failed was, that higher time frame. Uh, there was whatever this volume was. I don't know what this was. And again, it could just be rollover action.
Oh yeah, that's volume like that
Mhm.
could be rollover action. If you could bring up the Dece, I don't know if you can get it.
Can't do it on Top Step X, but it could be,
Yeah.
right? Because there wasn't, I think there was a speaker at the time which could have caused this, but this is at 9:33. So it's kind of like that off hour where like that off minute where it's not a news release, but it could have been a reaction to a speaker. Whatever it was, to me, it doesn't really matter.
Well,
High volume establishes a range. This stop run, if you want to call it that, right back down to that level, failed volume, push back up to the upside. You had something, coach?
um, no, yeah, the volume in in rollover period.
A little shaky.
Um, yeah, just be aware of it.
Yeah.
Um, but you know what? VWAP is will help you with that because VWAP isn't going to be affected by the roll. It's just going to give you the volume. Um, if it's trending, the VWAP is trending because if they're rolling, they're still keeping a position.
Mhm.
Um, but like pure volume, it's going to be greater. Period.
Yep.
Um, it's
Uh,
going to be almost twice as much as it usually is
got a
in short
comment
periods of time.
here from NASDAQ Trader. Why is it so scary to catch the lows? That run up was following a neat channel on the 1 minute, and every time it touched that support line, I bought and sold 15 points up. Why is it scary? Because it depends on the market conditions, right? It may not be scary. It seems scary, but sometimes that's the best trade location, right? Seeing that heavy volume and buying it. And I will take those trades, but because it gives you pretty good trade location. The reason it's scary is, especially sometimes for newer traders, that's why it's scary, because it happens so quick, right? It's like, okay, we're chopping around, market's not doing too much. Oh wow, 200 points to the downside. What just happened? Right?
Right.
And now you're on defense mode. It's like, hey, where's the next punch coming from? But when you realize the market conditions, it's, hey, these are these quick volatile moves to the downside, but they're not gaining any traction. For me personally, the first one that I see in the day, I'm usually not taking that one unless I have a higher time frame level. But if this is the pattern that market makers, market participants are showing me for the day, that second and third one, I'll usually take those.
Yeah,
Show
and
me
I
the
would
pattern
add to
first.
that is maybe the word isn't scary, it's challenging,
Yep.
right? To be able to buy a falling knife, so to speak. But if that fits your plan, and if you have that, number one, you have to have a plan. And I'm glad you had a channel.
Yeah.
If and that works in that situation, get on it. Um, and I go back to developing. One of the things we talk about, we get share and Top Step TV at many different perspectives of how to trade. And I'll go back to this. Absorb as much as you can and find a plan that you can comfortably execute. I can't. The coach. I agree with coach. Those are scary,
Mhm.
but if only because I prefer a trend type of trade.
Yep.
But if it fits into your style and you have a plan, that's why we have it. We need different perspectives to make a market.
100%. And when I say scary,
Great
it's not
question,
too
though.
scary because even if I take the trade, I know what my risk is going to be before I put it on, so it's not going to hurt me more than it's going to. When I say scary, it's low probability. It's a lower
Mm.
probability, right? And I don't want to put unnecessary risk behind a 50-50 trade if I don't have to. Right now, if I had this as a higher time frame level, and we talked about adding percentages to probabilities, right? Where this is a higher time frame level, right? We see Hoag's weekly kickoff high up here. I had that 19,180 level. Now I have a couple of things that are adding to the probabilities. If I had a couple levels there and it's a 70% trade, then I'll take it. But if I have nothing else and there's no level there and it's just a 50-50, to me it's not worth the risk. Because it's a coin flip, it feels like. But trade whatever makes sense to you, and manage your risk from there. We got about 15 minutes left. Let's go to crude oil real quick, Coach, and then we will talk about the new high of the day, all-time highs in gold. Uh, Crude oil, we have, let's pull up the moving averages again. Did I take them off? There we go. Seen this pattern a couple times in a few different markets, Coach. We saw it in the NASDAQ 2 days ago. We saw it in gold last week, and we're seeing it in crude oil today. I want to talk about that a little bit.
Well, what is that white line, Coach?
200 moving average, and we are on a 30-minute chart.
30-minute chart, and it's been trending down from what, 73,
76 about.
76. And for the first time we closed, we've traded at that level, that moving average. But to me, the most important part is not just the price. It has to close.
Yep.
To me, it's still a short covering. If I had a reason to be bullish, and I might here, if I don't even want to put that. If I wanted to buy it, let's just say I waited for it to close above it.
It's right here. 1:30 this morning.
Okay, and at 1:30 this morning, I'm going to put, if I want to buy it, I put 2 ATR stop. We've closed above it. I've avoided buying it from 76 to whatever price I bought it here. And I'm going to give two average true ranges. What's that, about $500?
Yeah, about $500.
So $500. And what's the price?
67.83.
So wow, that's like a $9. It's $9 cheaper.
Yeah, that's when
it
it crossed. Yeah, $9 cheaper from where it crossed the last time.
Wow. So it's that much lower. That's about a week.
Yep.
All right. Now, so let's see the 200. Now, if I wanted to buy, I've got a much better probability of follow through. We talk about this before, Coach. I find out the less I trade, the better I do.
Yep.
But now we've closed above it. We've stayed above it. We've tested that 200 bar moving average twice. Well, what's it to the tick?
To the tick.
But what else has happened? The 20-day moving average is over. These are the crossovers we talked. Now the 50 is crossed over, and it's bottom. That I consider that a bottom.
Yep.
In a place where I would look to buy on the breaks.
And we talked a little bit about this this candle that set the lows for 2023. And on the daily, bouncing off of, somewhere around this zone. Hoag's weekly kickoff low. That was a couple days ago, 65.50. But really nice bounce there. Didn't trade above that $70 level today, which is that going to be the next key resistance in crude oil. I would, if I'm looking long, am going to be watching the market's reaction to that, because above that, there looks like there's a lot of room for shorts to be covering on this move. D says crude is not rude anymore. It's moving like it used to, which is great, right? When the market, this market trading this way, I think even, Nick and Dakota said it while they were on Topstep TV. they were looking at the equities when they should have been looking at crude, right? And for that reason, it was presenting some really nice trades today. Let's go to gold. We got about 10 minutes left,
The play of the day.
and this is the one. Uh,
Yeah. We've
New
been
all-time
wanting this.
highs, when 2600, probably tomorrow. Uh, gold. We've been talking about this balance range that we've been in for 27 days. Uh, Pretty much an entire month since the last PPI CPI print when we made an all-time high, coach. And they were just waiting for data. Inflation data is affecting gold prices, is what this looks like to me. Um, and we are not far off that 2600 level, which everyone who has been trading gold has had eyes on since we got up to these prices. High of the day in gold, 25. Let me make sure I get this right. And we made it right on the close. 25.88.5. Highs of the day, 25.88.5. New all-time highs in gold. We closed at 25.87.2. And does not look like it's going to stop soon or wants to stop soon, coach. We finally seen that separation between the 20, 50, and 200 moving average, right, where we've been braided around each other for a very long time. That looks like the beginning of a trend. Uh, Anything, of course, can and will happen, but gold looks like it's ready to break out.
It was pretty calm data that was released, and gold still went higher.
Mhm.
We've talked about this before. That seems like a central bank kind of thing. That doesn't.
Yeah.
Um, so very interesting. So we talked about this too. It's like it needs to get going.
Hmm.
If
But
we
they were
look at the
holding it.
daily, yeah, wow,
There's your daily.
and we held the 20 moving average yesterday, I believe. Um,
And this morning as well. 20 moving
this
average, the 20 moving average today was right around 25.42. Lows on gold for the day were 25.40.
yeah.
20 moving average.
And once we bounced and held that, whatever, that's why I'm only looking to buy gold. I don't want to be short it. I can take small losses controlled, and then wow.
I'm
And
seeing some.
if,
Go ahead, coach.
from an economist or from a market point of view, it should have broke,
Right,
right?
right. Right.
So
I'm seeing
you were
some questions about the moving averages again. I would suggest rewinding. Coach Paul just talked about the moving averages on crude oil, but will you give a simple explanation of this? Coach Paul is looking at three different moving averages. It's a 20 moving average, a 50 moving average, and a 200 moving average. All simple moving averages, right? So you can use exponential. You're going to hear people talk about a bunch of different ones. Same concept for them all. The reason we're using three different ones, and coach, you can correct anything I say if I'm wrong. The 20 moving average is a shorter time frame, the 50 is somewhere in the middle, and the 200 is a longer time frame. The reason you're using those is because it helps identify how the market is moving. If we're looking at them here, this looks like the market is trending where the shorter term moving average is on a steep angle. The medium term is somewhat steep, but not as drastic. And then the higher time frame is pretty flat, right? So what does this mean? The last 20 candles, price has been moving pretty quick. The last 200, we're flat. So when you start to see this 20 move away from the 200, that means price action is picking up to the upside in this case.
Wow, great explanation, Coach. Um, Also, those moving averages are used by larger trading firms, commodity trading advisors, some hedge funds, especially the 200. It's a widely this no secret. You can't manipulate the 200-day moving average.
Right. Yep. It
So
takes into account so much data that it's an important level.
Yeah. So I did, by the way, I flipped around. I'd never used them. And
Mhm.
then I used them. Then I figured a way how to use them that worked for me.
I've
Um,
been because we've been doing this segment, I've been looking at them on shorter time frames, um, on a 3 minute, right? Once we identify that trend, using it on a 3 minute to take some trades, right? Using the 20 if we're above that 200. So again, the way Coach Paul is looking at them, the way I learned it from him, and uh, is on a higher time frame. If we are above the 200 moving average, coach is going to be looking to buy the market. If we're below it, looking to sell. Now, does it mean a blind buy just because we're above it? No. Trade location is always going to matter.
yeah, and think of it this way: on a rising, let's just use a rising market. The thing to do is buy the dips.
Right.
If I figure out what, then now you have to tag that. What does that mean? Buy the dips. Then you find a lower time frame to look again, um, and find a way to buy it. And by the way, I lose more than I win.
Me too.
But if I'm yeah, but if I catch something, my risk reward, I don't know when it's going to happen, is going to be greater than 5 to 1. It's the way I play it. Like I said, and it it works for me, um, because I have to detach from every tick. Um, but even on a shorter time frame with small positions on day trading, maybe you pick 2 markets to do it, right? Once in a while, you'll nail both of them. Half the time, you won't. But that's a formula for having bigger winners than losers. Um,
Coach, we got about
Coach,
3 minutes left. I wanted to ask you
uh,
something. We mentioned before the call. You had something on your scouting report today.
oh
What is that? What is
yes,
on Coach Paul's scouting report today?
Japanese yen,
Japanese
Japanese yen
yen.
on the buy side.
On the buy side, we're going to go to a 30-minute chart. I'm going to pull up Coach Paul's moving averages and I'm going to ISO and
Look
let
at
you
that
go to work.
VWAP
What
too.
are we looking at?
We're closed above the 200 bar moving average again. We're sloping up. We're above that purple VWAP. Is that from CPI?
Probably.
Is that the yearly?
It's going back pretty far. This
All right.
is
Anyway,
something in
um,
May. I don't know.
on a 30-minute, we're above the 20-day moving average. Also on the daily, this market has. We've talked about it, especially when we were on Discord, was like the greatest sell of our lifetime.
It really
This,
was.
but things have changed, and the way I see it, it's accelerating to the upside. Um, if we look at a daily, we're above the 200. We've been above it for a while here. I'm not going to do it now, but the long-term trend line, we've held above that. Um, the flow is to the upside. I like buying it. That's my scouting report. Yeah, there you go. That's simple. All those things that were there for what, years, 2 years,
Yep.
are gone.
Yeah.
I can see this beginning to accelerate.
Very nice. We
Um,
can see how long, this trend line is from. This is the high of this trend line here is from December 2020. And this market has been in a downtrend that entire time and finally broke
2020.
above that. Just so
It's
happens that
40.
2 months ago, we had some pretty big news about a carry trade
Yeah.
that was ending. I like this one. I like this one. Really like this one. Uh,
Yeah.
that is a big change for the higher time frame. And again, it could just be short covering, but they got a long way to go.
Right. And to me, I think I have a better. There's going to be a better range to the upside than the downside, if that
Ma-
makes sense.
Makes sense to me.
So that isn't a recommendation. That is, an opportunity I like
I agree. Really like that one,
on
Coach.
this
That
on the
is
scouting report.
Coach Paul's scouting report. And I'm going to go out on a limb and say I think that report is probably good for about a month. Go out on a limb and say that. We will see what happens. Of course, it might not be, hey, this is a great trade tomorrow, but there seems to be some opportunities presenting themselves in this market, and it has already, right? Look at the last month and a half. Some really nice
It's only a
trades.
month and a half,
Yeah, this is
and we're
40,
coming to
43
the end
days.
of the in 2 weeks. We'll be coming into the last quarter. Could this? Okay. Anyway, I like it, and that's my pick for the
Awesome.
scout.
Thank you for that, Coach Paul. A little outside market action, outside of what we normally talk about. Again, there's opportunity in other places. If you are looking at a different market and you have not traded it before, our suggestion is always going to be to trade it in a practice account first, get familiar with how the market trades. But I truly believe that patterns are patterns. And if you can identify it on one chart, you can apply it to 1,000 charts. Um, that is going to be it for us on the session. Coach, you got anything before we go?
Good luck tomorrow. Get some rest. Focus on executing a plan. Like
There you
that's
go.
in that plan is risk management, and that way you can become consistent.
100%.
Otherwise, you're prone to randomness.
Yep.
And that's all I have for today.
Awesome. Thank you, Coach. I'm going to echo that sentiment. Hopefully, if anything that you've learned from the last 2 days and going into tomorrow on Topstep TV with this Dakota takeover is a plan, right? Identify a plan, trade your plan, do what makes sense for you. I will be on Fast Markets tomorrow with Dakota for the takeover to open up the market. Really excited to do that. Hopefully, we'll get some trades in, but ultimately, what we're going to do is manage our risk accordingly. Thank you, everybody, for joining. On your way out, if you haven't done so already, please go ahead and hit that like button. If you're not subscribed, do that as well. We do have coaches with classes in Discord. Coach Ray does a class every day at 6 p.m. Central Time. Coach Ray is an amazing volume profile reader, great levels trader, has been a Topstep live trader for the past 4 years. Doesn't get talked about so much for his trading, but he's held a live account for over 4 years.
That's
Coach, impressive.
that's an accomplishment.
Yes,
Yes.
it is. No class from Coach Ray today. Thank you for that, Tommy. No class from Coach Ray, but he does them every day. And if you want to spend that time and you miss a Coach Ray class, he actually records all of them and puts them in Discord. So maybe in lieu of him having that class, go watch something in the library. And then Coach Vince does classes at 7 p.m. I wonder if they switch times. Vince might be a little earlier. Make sure you check the calendar in Discord for that information. And of course, we have Dakota with slow markets tonight. The dude is running an ultra marathon on Topstep TV, but hopefully it's benefiting all of you as traders. Thank you, everybody, for joining us today. Trade well, manage your risk, and we will talk to you all tomorrow. Bye.
Good night.